All right. I hope everyone's having a nice weekend. Looking forward to this update. Gonna get into I think is the framework that everything else follows, and that is the kind of the liquidity vector, the underlying driver, the dominant trend, the whatever you want to call it, the macro picture that dictates everything else that is to follow. That is the analysis on Bitcoin from a high time frame, from a trend perspective, from a lower time frame. Remember, guys, the lower that we get, the time frames, the less accurate things are going to be. The higher the time frame. This is an S&P 500 monthly chart. This really talks about that illustrates that concept very well. The higher the time frame, the more accurate and the less room for error. Uh, and I'll get into what that means specifically in the context of Bitcoin and the miners and MicroStrategy down, as we kind of go down the risk trough, so to speak. Just a reminder, I'm not a financial advisor. I don't know what's going to happen next with these things that I talk about. They go up, they go down, they go sideways. I just have my beliefs and my convictions, and that's what I'm here to present. Just use this as education. Always do your own research. With that being said, the environment in which Trump's, no pun intended, everything I'm going to talk about, for all intents and purposes, is illustrated by when Bitcoin was born. And when was Bitcoin born? It came out of this creation out of the great financial crisis and has literally been in this environment since its inception. Okay. That environment since its inception. And this environment, this is again the S&P 500 on a monthly time frame. And those of you that have followed my analysis know I take a few different approaches and kind of combine them, one being an Elliott wave standpoint, another being trend analysis, another being kind of a Wyckoff standpoint. I like to kind of triangulate on all three. But this, from an Elliott wave perspective, if you, Google what an expanding flat correction looks like on a high time frame, S&P showed you what that looks like, right? Going into the dot-com bubble in 2000, and then down, and then all the way back up to range high, just slightly exceeding that range high here, and then just a sharp 1, 2, 3, 4, 5 undercutting, right? Undercutting that previous low for a C, and that was really where this 10-year correction ended, and you got the start of a new bull phase. Expanded flat corrections can be very, very brutal. However, a lot of opportunity came out of that section where we are. No surprise. I think what we saw in 2022 on Bitcoin was an expanded flat correction on a lower time frame than this S&P chart, but nonetheless, that's getting a little bit in the weeds. However, what isn't in the weeds is what we've had, since 2009, and that is just this beautiful uptrend. And as I kind of had this uptrend, you got 1, 2, 3, 4 leading diagonal 5 type of first impulse, A, B, C, and coming out of that 1, 2, 3, 4, 5 to make that primary 3, and then this A, B, C, D expanding triangle. E to complete 4, that was the COVID crash. And then 1, 2, context of 2 here is minor 2 is in the overall context of this bull market trend that we've been in. And now I think we're approaching 3. And folks, just to let you know, I mean, some fib relationships here that are very important to note. Right now, the 2618 is the next important fib. When you look at from the top, to the bottom and where we are from an extension standpoint. This area here, we did a lot of negotiating around, okay? This fib extension. What fib extension do we think that is, where my picture is? Oh, surprise, a 1618. 1618, very important fib extension. As we negotiated around that for the better part of 2 years, and the market continued to make a move, we had a little bit of resistance approaching the 2 extension, which then got exceeded and then retested. Okay, retested that 2 extension, and now we are on our way to, I don't see any real resistance until 61.66 on the S&P. And so the only question in my mind is, uh, we don't have any real retail participation here. I don't hear anyone in the real world outside of Twitter talking about, buying stocks and things like that and speculation. And so beyond that, 7,111 and even 8,527 seem like very reasonable targets, given where we are. And this thing is just, I mean, folks, let me get rid of my drawings. Let me get rid of my drawings. I mean, look at the structure as it's unfolding. This is a final type of leg movement, and it's approaching, this kind of a parabolic movement. And that's what you'd expect to see later stage in the context of this bull market that began back in 2009. Okay, so that's the context of which everything else is operating under. And again, that's why I didn't pay a lot of attention to the COVID and this and that back here, or the Fed, this and that here. The primary trend, according to Dow theory, can't be manipulated. Okay, this entire spring was activated for 10 years in the form of this expanded flat correction. The energy of this massive correction in financial markets that lasted a decade was then released. That can't be manipulated. You can have volatility, but that can't be manipulated. And so whatever inflation or CPI or rates this, rate that, people that are telling us about the economy, whatever those things are, the market has discounted all of the information that we have access to. That I firmly believe. And so that's why you don't hear me talk a lot about those things that I don't fully understand, but a lot of people talk about. But I do understand is trend analysis. That's a powerful uptrend. And there's some clear movements within this trend that I've labeled or attempted to label, and that interpretation is my interpretation. What I also know is we've had an opportunity, if there was going to be a reversal here, folks, this is a monthly chart. This is a bearish divergence in the works, okay? Where you have your first touch point, this is RSI, second touch point in 2021. And in September, folks, we were approaching that third touch point, a great opportunity to develop a bearish divergence, right? Where RSI makes a lower high, price is making a higher high, and it busted through that. Does that mean this is just going straight to this target? No. Could we be approaching a 3-4 type correction and then 5? Sure. Could we get some volatility around the election? Sure. Do I think it matters who wins the election? No, I don't. I think this chart tells you it doesn't matter who wins the election. The path to where this thing is going may look different depending on who wins, but I firmly believe the destination is going to be the same, and that goes for Bitcoin as well. And so coming back to, what happened in September here, I think is also very, very critical in terms of what it's telling us on higher timeframes in terms of risk markets, okay? And so with that, I'm going to go to Bitcoin. I kind of talked about that expanded flat correction that took 10 years to unfold with the S&P. Well, look at what we have here, right? We've got that swept the highs, and then 1, 2, 3, 4, 5, and then you sweep these lows. That looks like an expanded flat correction to me, right? And they're brutal, and they make people think that we're going the opposite direction when in fact this was the start of something new. Okay, the start of something new. instead of the end, right? FTX collapse, that's the end. It's over. No, actually, it's the opposite. It's the beginning. It's the beginning of something new. The great financial crisis, the bottom there, oh, it's the over. No, actually, it's the beginning of something new. It's the opposite of the old opposite game, right? Contrarian, whatever, however you want to talk about it. And so here we are now in that environment. That's the environment we're in, folks. That's why I put that, I went through that exercise first. And I've got Bitcoin here up on a weekly time frame. And right now on the weekly, Bitcoin is just breaking out. And I see a lot of hedging and nervousness and unsure. And again, retail's not nowhere to be found. They're not even here. And we're breaking out, right? We've got this descending, broadening type of triangle structure. We've got a breakout on the weekly, and it's Sunday, it's noon, it's not confirmed, right, until the close at 8. But it's breaking out on the weekly, and that's happening. And we've got a set of circumstances and a set of technical circumstances that tell us that minimum target from this consolidation is 136,937. And again, I hear, a lot of targets, 90, 100, 120, 130, 150 are the high-end moon boy targets. Yet the minimum technical target from just this consolidation at the 1618 is 136,937. Well, Koosh, where do you get that from? What is this? What is this? Trust me? Like trust sources, trust me, right? Well, no. Let's look at the technicals within the context of the bull trend. And again, nothing, because it's happened in the past does not mean it's going to happen in the future. But what we do have is consolidation structures, again, in the form of, I've got Elliott wave combined with this analysis, right? We've got a 1-2, we had a flat correction here. We had the impulse, which is the flagpole. We have this consolidation, which is the rectangle, which is the correction, which is the 1-2. And what was the minimum target coming out of this consolidation? Well, it's the flagpole. And the flagpole, if you want to take the most conservative, you come out of the bottom of the rectangle. So if we're looking up here at this image, the bottom right of that rectangle or the flag. And I don't care if this is a flag versus a rectangle or descending, broadening, whatever. Doesn't matter, a pennant. The point is the same. You're talking about consolidation, correction structures, impulses that go in them, and likely targets coming out of them being very proportional to the energy, the impulse that came into it. And that's the same thing as looking at a Fibonacci relationship, right? Looking at a 1618 extension from the origin of that impulse or the move into the consolidation and seeing where the 1618 is. So we're going to do all three at the same time here. And so looking at the most conservative target of this impulse coming out of this rectangle was 48,633. What was the 1618? Oh, no surprise. It was 46,843. And so did Bitcoin hit it? Yeah, Bitcoin hit it. It actually hit it and then exceeded it. It consolidated before it under the 1618, and then it exceeded it to the tune of the 2272. 2272 extension. That's just what happened. That ended up being the technical target ended up being exceeded the energy, the impulse that came into this 1-2 correction. Okay. And so let's run the same exercise and take a look at what potential targets we can, surmise coming out of this longer correction, mind you, longer correction. We had an impulse, we had a movement, we had a flagpole, whatever the heck we want to call it. And then we had this correction. I'm calling it a 3-4 correction. I'm calling it complete. Time is going to tell us whether that's fact or not. And the energy as it comes in, if we're being conservative from the bottom end of that consolidative structure where I'm claiming it ends, coming out, the technical target of this is 145,761. Simple, conservative, measured move. Now, what's the 1618 from, this origin of impulse to 3? The 1618 is 136,937. What did it do last time? It got to the 2272. What's the 2272? 2272 is 269,159. Why isn't that target being thrown out? Why isn't that target being thrown out as even reasonable or as a potential median target? When this is the environment, folks, this is the S&P 500. This is that spring that's been loaded since the 2000s for 10 years. It's now being, this energy that's now being expressed itself in financial markets. It's the opposite. And that's exactly what I want to see. I want to see sentiment. I want to see uh, targets that are conservative. I want to see disbelief. I want to see, which I see a lot on my timeline. No way we're getting to 270. No way. Not happening. 120 is the max. Like definitive statements. And I don't know if we're going to hit 270. I don't know if we're going to hit 136. But I think I think a minimum expectation of a target should we break out is very reasonable to say 136. The average expectation for me is 269, and the higher end, lower probability would be over 300,000. But again, that's still in play. That's still in play when if and when this ends up breaking out in terms of a continuation leg for this bull market. So this is just looking really, really healthy. I know there's people talking about open interest levels and again, the market discounts all of the information that we all have together. Okay. So I don't know enough about this open interest. I don't know, directionally, no one can answer the question for me. For every long, there's a short, right? So just because there's elevated open interest, directionally, what does it mean? What does that mean? If funding right now to the data I look at is still relatively neutral, slightly positive, isn't exorbitant. Does this just mean that the interest in derivatives is just heightened and directionally maybe slightly skewed to the longs as it should be? As it should be. This is a bullish continuation pattern, and it should be bullish. And as price gets back towards all-time highs, more people should be bullish. And so again, I just don't see a lot of alpha in that information for me. But time is going to tell. And so what are some short-term potential, possibilities I'm looking at? And again, folks, when I do this short-term stuff, this is when I get less and less accurate, okay? The most accurate is your highest time frame. This is the S&P. I was posting this chart back here, okay, this whole region saying V-shape incoming. Did I get every one of these moves? Boom, boom. Oh, I called every one of these a precision. Hell no, absolutely not. It's impossible. Anyone that tells you they're calling every one of these moves with precision, I would be very, very wary of, because it's very difficult to do. And if I did call, a couple of the short-term moves right, then one should think that the next the next short-term moves I'm going to get wrong. Because again, the longer if you're trying to move in and out of positions, it's like gambling at a casino. The longer you do it, the more the house is going to take your money, in my opinion. Let the market do the work if you're invested. Sit back and let the trend do the work for you. Okay. All right. Where was I going? Now, yeah, back to the short-term kind of speculation. As I'm looking at this structure, I see a lot of stuff going on here. A lot of stuff going on, from just a structural standpoint. I'm kind of calling this the spring. I'm calling this 1, 2, 3 movement, this first impulse, ABC, this test, and then 1, 2, 3, 4, 5. Potentially you got a minor one, and then ABC, and then sub 1, 2, 3, 4. And maybe there's a 5 that's in front of us here. Or maybe maybe this is just a subdued 5 and we've got an ABC coming in here for another LPS test. I know a lot of people are looking at the 62, 63 range. The whole open interest thing, I don't know. I think that's a lower probability. I really do. What I think is really going on is we've got a jump across the creek in play right now. We had this successful test of this LPS, last point of support region. I mean, that's a creek, right? And we for all intents and purposes, jumped it. I also don't discount, let me throw this up in the daily chart. I don't discount what also is happening as it relates to this trend line. Okay, so I don't know if you can see, this is a daily, this yellow dot, let me dash line, let me take that dash out. Okay, and now I've got it. Let me brighten it up so everyone can see it. Okay, this essentially is this downtrend that dates all the way back to March 2024. And so how many closes do we have over this? We had none, 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 none. We've had one, two, three daily closes above that downtrend line so far. And so that's where we are. So technically that's, that's a strong picture. That's a consolidation. That's a sign of strength type movement, the way I'm looking at it. And so let me get rid of these. So we're going to find out what's next. But again, my bias is that, where the market just isn't going to please the most amount of participants, and the path of most pain here isn't giving people second chances where you've had 7 months. So I'm looking for, one, two, maybe three, four, five into mid-November to the 88, 90 to 100K range, and then maybe a correction on our way to much higher than that towards the end of the year. And so again, this is low time frame, so take that for what it's worth. MicroStrategy, again, as I've been talking about for weeks, has been telling us already, I believe, what is happening here, what is happening, and how does this chart look, folks? What was I talking about in this chart back here? I was talking about a very clear rectangle, very clear rectangle. And does it matter the shape? No, it doesn't matter the shape, in my opinion. Right? We had a rectangle back here, right? With Bitcoin. Okay. We had a rectangle back here and it broke out. Now MicroStrategy showing us a rectangle up at where? Where was previous all-time high, folks? Previous all-time high is literally that block right there, okay? A rectangular consolidation above that previous all-time high. And we got a breakout. We got a beautiful retest earlier in the week. And now we had a close above that candle from last week. That it cannot be overstated how bullish that is. I'm sorry. I am sorry. I'm sorry. I'm sorry. You got essentially the highest weekly candle close ever since MicroStrategy put Bitcoin on its balance sheet. $216. So pre-split, 2116. And I was, for those of you that have been following me for a while, know I've been talking about MicroStrategy since the 200s. The 10x right there. My God. Am I piling into MicroStrategy here? No, absolutely not. I'm not. Am I in this camp where I think the premium is going to keep going up forever? No, I'm not. I think this move is entering its final stage. I'm being honest. My target here is 550 to 600, something like that. So we'll see. WGMI, the Bitcoin miner ETF, just unbelievably bullish, folks. No way around it. Does it mean it's going to gap up and go Monday and, moon? I don't know. But again, we've been talking about this one for the last few weeks. We had this inverse head and shoulders I talked about in the making and looking for a check back to create that right shoulder. I think I did that on a video a couple weeks ago, maybe. And we just had a beautiful check back and now it's moving, right? I mean, just look at that textbook inverse head and shoulders. The breakout target for this move here would be 28, which also corresponds to this massive channel. Basically, it's like a massive handle, right? I mean, there's just so many technical things that are going on with the miner ETF, right? Just this massive handle. I don't think, like MicroStrategy and like Bitcoin, I think the miner ETF is just lagging, and its third move is starting. So I kind of see this as like a leading diagonal, 1, 2, right? 3, 4, 5. And then we had an A, B, C, and now I'm seeing, to make 2. Uh, and now I think we're in the midst of potentially breaking out to 3. Okay. Some things to know here. I was talking about in the videos last few weeks, that volume. This was the giveaway for me so far on this ETF. The number of shares traded at this level and how it was defended successfully for 1, 2, 3, 4, 4 weeks, reclaimed and defended successfully. That's just a sign of massive reaccumulation. We had, volume kind of coming down, right? And now we're starting to see a little bit of a pickup. So we'll keep an eye on this one, but again, looking for much higher. I think this next move takes us to, the 40s, 40 to 60 range prior to any meaningful type of correction. Could we get an early correction early next week? Sure, we could, right? This could be, I could have this mislabeled where I have this as a 1, A, B, C, 2, and I have 3 in front of us, okay? So there's also the possibility that this is doing a 1, right? 2, 3, 4, and then maybe making a 5, and 1 is here. And then we get like a 2, and then move out to 3. I don't know. Just a possibility, but we'll see. The Bitcoin mining ETF denominated in Bitcoin next week, I think, is important. Will tell us that this WGMI denominated in Bitcoin will tell us whether that correction that we're in fact in an impulsive move, or we have maybe a week or two of correction in front of us before we resume that movement. Here's the cloud on the weekly. The reason this green candle, since it's the weekend, is where it is because it's a weekend. But the actual week closed just short of this red cloud, the Ichimoku cloud. And so how we open next week is going to be critical. And if we get in this red cloud to start Monday and we stay here, then it's game on. And it's absolutely game on with the miners. And so on a daily time frame, again, looking very, very bullish. As I was talking about last week, at moments in time where we break into this cloud, it has been the start of a lot of upside before. And so that lines up with what I'm seeing here with the Bitcoin miners denominated in Bitcoin. So with that, folks, I hope you have a great rest of your weekend. Look forward to doing more of these, and yeah, we'll be having some fun, I think, in the next few weeks. Take care.